So, Cathie, sounds like the bull case is still very much intact, at least from your perspective. I wanted to ask you about some of the other markers in the market right now, particularly as it relates to the war in Ukraine. Have we seen peak market impact yet, and what should investors be focusing on here?
It's very hard to say if we've seen peak market impact. I know the markets are getting hit today. Typically, the way we see the peak is through the VIX, the volatility index. And it has moved up. It's in the mid-30s. I'm not sure what this morning is. And the shock in 2018 and the one before that got us into the low 40s. Of course, the coronavirus got us to 80. But we're getting close to those cathartic moments in the past. I would be surprised if we do go to the coronavirus levels, because remember, people were expecting a depression. The whole world shut down. This is not that. This is going to cause a lot of problems from a purchasing power point of view. I think the risk of recession has gone up dramatically as purchasing power is dropping dramatically. In the U.S., the consumer saving rate already is down to levels we have not seen since 2013. So that buffer that the stimulus payments created during the crisis, that's gone. And so consumers are probably going to pull back. Sentiment suggests they will, and in some ways they already have. If you average over the last 3 months, this is U.S., consumption in real terms has been pretty flat.
Okay, so you're seeing recessionary risks rising.
Yes.
With regards to the war in Ukraine, investors are also seeing finance being used as a weapon. Shouldn't that be more bullish cryptocurrencies and Bitcoin?
It should. It should. It's been very interesting to watch crypto during this time period. If you look
what role has it played, do you think?
Well, I think that more and more individuals are seeking insurance policies against confiscation of wealth. Confiscation of wealth can come in the form of inflation or outright seizure in Russia, for example, and other economies. So since January 31st, now these numbers are changing quickly, and we calculated them last week, but the flight to safety that we've seen has been in 3 places. Certainly gold. That's up the most. Crypto is second, and the dollar. And of course, long-term treasury bonds. So we're seeing those yields come down. The yield curve continues to flatten. I think we're at 25 basis points this morning. We don't have very far to go before inverted, and that has typically been associated with a recession.
Also, Cathie, with regards to what we're going to see when it comes to this month, likely Fed hike, 25 or 50 basis points, what does it mean for your portfolio construction moving forward? We have about a minute left.
Sure. Well, I think Chairman Powell said 25 basis points. The market had discounted 7 or 8, and it's starting to rethink that. I don't think we're going to see anything like that. I don't. I think that this increase in energy prices and food prices is a huge tax increase on all consumers around the world. And that's more associated with recession than inflation.